All right, I'm going to go ahead and start. Just type a Y if you can hear me and see the screen. Type a Y if you can see me and hear the screen, just in the chat box. All right, perfect. All right, so for those of you who've been here 100 times, there's probably not a lot of changes except you'll see the updates in the Market MRI Pro, and I added a few things to the presentation. I've been doing the same thing for a long time. I don't really change what I do. I'm constantly looking for things to add and improve. And what you're going to see is sort of where my journey has taken me. There's going to be three parts of today, and I'll take a break somewhere in the between since I'm now in my second large Dunkin' Donuts coffee since my flight got in last night at about 1 in the morning Eastern time. I figured I need the coffee. So I'll have to take a break sometime. And the first part's going to be sort of the probably the longest part, just reviewing the my approach to trading. And the first part's going to be platform agnostic. So if you use HDSI or TradeStation, um, you'll see something for you as well, wealth charts. Because my stuff is in all of them. And yeah, I'd love to sell people Market MRI Pro, but frankly, um, I'm really taking what I learned from a lot of people and passing it on. And someday when I'm gone, maybe you'll pass it on to somebody else as well. Now, if we can only get young people, that would be easier because typically we have a lot of people my age and above. So the first part's to review that. The second part, I'm going to go into Market MRI Pro and just basically show you how I do my updates. And I talk during my updates and teach people on the things that I post. But if I didn't, it's designed to be 20 minutes and done. And then the third part, and I like doing it, is to show you my approach to trading options. My approach is probably different than most people because I'm not a pure trade. I'm trained, obviously, I've learned options, but I use them as stock replacement. And my goal is to find an option spread that doesn't cost me much money and gives me unlimited upside. And I'll show you what I do for that. Because if it doesn't cost you much money and you can limit your downside, it's hard to lose a lot of money on an option. But we'll talk more. And the Options Industry Council, the OIC, has a great website for to review the things that they think are important and the more pure approach to options. And they would tell you that options are risky and you should be very well educated and trained before you trade them, and I would agree. So despite my sort of aggressive approach, I've been doing this for a long time. So this is for educational purposes only. Anything we talk about should be taken in the spirit of education, not investment advice. This is about teaching you how to do top-down analysis of the various tools. Trading involves risk. You are solely responsible for any investment decisions you make. I when I do my videos, I'm just talking through my own thoughts, and I'm looking for stocks to buy or what to do with my portfolio. So I may own or intend to buy or sell anything mentioned in this report, and I'm not going to necessarily tell you when I'm buying something or selling it. Trading stocks and options should be considered risky, and you should consult with your financial advisor before making trades. And as you'll see, my tools are inside multiple platforms. I will also tell you that my tools are not fancy. And, you know, if you think about all the tools out there that you can buy, they all have the same inputs: price, volume, and time. So there is, I'm pretty basic, and you'll see how I look at indicators. But there's nobody has a future looking indicator. Seasonality is a great tool, um, but that's not necessarily going to help me tomorrow. It might give me an edge. But every indicator out there, I don't know what other variables you could put in there. You could have rate of change of time, rate of change of price, averages, but it's all the ingredients are price, volume, and time. What's on a stock chart? Price, volume, and time. So, for the one person here who might not know me, I am a cancer doc, board certified. I've been training since the 90s. Um, I like entrepreneurial stuff. So I got bored with practice and I quit in 2001, and I've had multiple startups. My current one is a healthcare tech company, a big data play in cancer medicine. We do a lot of research. I've been teaching people how to trade for 20 plus years, and because of my day job, I had to develop a style of trading that allows me to do it at night and then pre-program stuff in the morning because I'm busy. I got 3,500 employees. Um, my mom likes this slide, and it just to show you, and there I am, 'cause I'm still actively doing cancer research. Cancer research can be in a lab, developing new drugs. It could be in a clinical trial. But a lot of work today is looking at gaps in care and quality, and we use our data to make doctors better. And this is just one of the studies that I published. And I'm pretty proud of it because it got included in the best of, and this is for my professional society. Ian Woodward is a legend. Most people never heard of him. And again, part of why I do this is to pay homage to him and to introduce you to a lot of things that he taught me. You'll see some white background slides, and I'll show you the little symbols in the upper left-hand corner. He gave me permission years ago to use his PowerPoint slides. He's passed quite some time ago. Um, he used to say in his British accent, which I won't try and repeat, that he's not a guru who'll teach you to be your own guru. And I think that's the way you should look at everybody out there. Everybody among my executive team and friends are, will I trade for them? No. Will I tell them what to buy? No. And they don't understand why, but my job isn't to do your trading for you, it's to teach you how to trade. And if they're not willing to make the investment in time, I'm not going to teach them. And the reason why I won't tell people who are not traders what to buy is because they forget to sell them. And a lot of growth stocks, um, I don't know how many of you listen to my videos that I do at night, but back at the June meeting last year, I talked about Summit, which was in the $10 range, and it was trading in it really moved a lot um, a week ago, and it got up to about 35, 37. Clearly was, from a technical analysis perspective, was overdone, and then it dropped 23% or 25% the next day, or 2 days later. And on my video, I said, I'm taking half off here. And I did. And then I bought that half back after it dropped. Um, so that was a rare time when I told people I was selling something. I've spent a lot of money on education with the Minervinis, Bigelow, Elder, John Person, Rob Hoffman, and others. I like to think that I took all the things that I learned, and as my little granddaughter, who's now almost 4, would say, I smushed them all together and got my own approach. So that's what I'm going to show you from 30 years of doing this. Um, if you're a wealth charts user, um, just because I have my own platform doesn't now mean I don't use wealth charts. I do. And in fact, I still put a video up at stocksanddocs.com, probably now 2 or 3 days a week, as I do them every night on YouTube pretty much for the top down trading group. So I'm a top down trader. What does that mean? I'll talk about that. I'm a swing to position. The only time I day trade is when I buy something and get stopped out in the same day. And that is not intentionally how I like to trade. Um, I use daily and weekly charts. Therefore, Market MRI Pro does not have intraday because our next educator likes intraday. We're going to release intraday snapshots. I don't want it to be streaming because of the server cost, but I'll show you how fast the thing updates. So we're looking at probably doing 60 minutes, maybe a minute time frames, but more to follow on that. Not for me, just because of the next educator that's coming in. Indicators and scans, they don't paint by me. What they should do is draw my eyes or help me take a large group of stocks and narrow it down to a smaller number. Um, you know, those that are old, like me, There was a company called Wise Trade, I think it was called. I actually bought their stuff. And people used to make fun of them because it was very commercial and didn't work. Well, actually, it did work. And like almost every other system you watch, if you religiously follow the rules, it was a multi-time frame moving average crossover system with yellow and green lights. They made it so juvenile that people thought it couldn't work. It worked. All right. It was funky as heck in the how it looked, but you could look at 10 time frames, 8 time frames, and when they lined up, you bought. It probably was a good time to buy. Yeah, I see. I wasn't the only one that got suckered in. I would say suckered. I made money using it. So I trade equities and equity options. I love options. Frankly, I love about 5 trades. I like a long call. I like a broken wing butterfly. I like 2 or 3 variations of ratio back spreads. I like synthetics. I like what I call a chicken synthetic, which is a synthetic that is safe. And we're going to talk about all those at the end of the presentation. Um, I went to an Alexander Elder meeting once, and he made everybody get up and talk about their A trade. And it was my first time at one of his meetings, and so I had to figure out what that meant. And what it meant is, what are you looking for every day, and show me a great example. Well, I want stocks in a longer term uptrend when the market's going up. I'll take downtrend when it's down. I want to pull back to support or retracement to resistance. I want to buy in momentum off support or off resistance. I use rules-based position sizing and money management. Um, that's probably more important than anything else we're going to talk about today, and I'm not even going to talk about it. I will in Orange County, though. And seasonality, why not have the wind at your back when you attack, as Ian would say? I can do this in 20 to 30 minutes a night. My wife is about ready to kill me because now I do a video for stocks and docs some nights. I do them for the YouTube and Top Down Trader group. And so now my 30 minutes has turned into 2 hours by the time I edit and process things. And my basic approach, like I said earlier, has not changed. And, Praveen was somebody that was watching me, and we did a couple of indicators, and I gave somebody, I'm not going to tell you how much money to build me my scanner that's in wealth charts, but make it real time. And I got nothing out of it, but I think Praveen must have heard me griping on a video how I got ripped off. And he basically created Market MRI Pro in a couple of months. And it's basically everything that I used in the different programs is now in one program that makes my life easy. Look, I have a life just like you all do. I mentioned I'm out in Santa Fe, which is my hurricane hole for life. A hurricane hole in Florida is where you park your boat. That's my boat during hurricane season. Um, we leave and we come out here where they don't have hurricanes. My boat is called Stocks and Docks, which people get a kick out of when they come on it. This is my best trade of all time. That's my 65-year-old wife, and that picture is taken within the last couple of months, or last year at least, because I bought the boat last June, so this is boat number 4. I met her on a blind date and proposed 2 days later. I would argue that I do much more research on stocks that I buy than on the girl I married. Um, these are the best things that'll happen to you, and those that are getting old know that, and that's grandkids. Um, your kids are fine, but you really love the grandkids. And then I went to Michigan, and not to share personal information, but I had some pretty significant surgery last year after the June meeting. I'm doing great. Everything's good. All the numbers are good. And I'm a workaholic. And the day before surgery, I was up in New York City flying home from Teterboro, the private airfield. And I saw these people come in with Michigan garb, and that's where I went to school. And I got my pre-surgery pep talk by the coach of Michigan. Now, how cool was that? I knew I was going to do well with surgery. So today I'm going to talk about my style of trading, show you how I use different tools. I mentioned some of them. And then I'm going to show you how to build your own timing model. use tech to find leading industry groups and sectors, use scanners to find potential trades, and then identify some trades that I might consider for Monday and how I might trade them. Again, every day it used to be, now probably every weekend and 1 or 2 days during the week, I'll put up stocksanddocs.com. And if you haven't joined my Google group, there's no hyphen there in the group, but top down trader. And the reason why I have that is not because I like doing extra videos and putting out notes every night. I have it because um, I got tired of my emails coming back as spam. So the only people that get my nightly emails are people who are in Top Down Trader, and typically I attach my videos to them. I've mentioned the Orange County. I got the wrong hotel, but I'll talk through it. We do this every year. It's a low budget meeting. It pays homage to George Lee, who used to run that meeting. And George, well, I love George. I love the memory of George. George liked to keep it cheap. So it was $300. It goes to $400. It's 3 days of education. It's no frills. We don't feed you. We don't water you. There's usually breakfast in the hotel and there's coffee available in the hotel. Um, but people wanted it cheap and we do it cheap. We are filling up in the room. If you want to come, it's time to do it. Greg Mills at GAM72054 at AOL.com. If you want to come, but you can't because you've got a conflict, pay the money anyways. And you'll get the videos and my PDFs. And we have some great speakers. Dan Fitzpatrick from StockMarketMentor.com. First time his team said, "Oh, he doesn't do this," and then I reminded him how long I was paying for his service. He's doing it. John Person, who is our first educator to build his tools into our program, added price, just to let you know that. So I'm not upselling you. I'm just letting you know that. He'll be zooming in. Chris White from England, and I'm crossing my fingers that Matt. Oh my God. Oh, hold on one second. I don't want to mess up the last name. I subscribe to his service. Matt Caruso has also, his team has said he'll come in via Zoom from Canada. I offered him a day on the boat for his family in exchange for that. Um, Matt's the only one that's tentative. Dev Keshov will be there. I'll be there. So it'll be a mixture of in the room and from outside. Internet will be, well, we're going to go internet again this year. My primary responsibility is to the people in the room. You may pay the same price, but they pay to travel there. But we haven't had a problem with the internet. We get the audio worked out. It's always 20 minutes in the beginning to make sure everything works. It's not the Fairfield Inn and Suites. It's the Residence Inn. It happens to be in the same parking lot, so if you go to the wrong hotel, it won't matter. All right, Ian slide. This is Ian Superman from his he wore on his shirt. Snakes and ladders was what they played in England. We play shoots and ladders, and the concept is simple. It's the same as life and your wealth creation. We all start at number one, and we roll the dice over life, and we go around and around and around, and you get a windfall. You hit the blue box here, number 28, and you immediately shoot all the way up to 84, and you're thinking, I can retire. Life is great. I am so happy. And then you roll a 3 and you hit the proverbial bear market snake and you go back to 24. I've been doing this a long time. I haven't blown up accounts since the early 90s, thank God. Um, and typically I blew up accounts because I didn't know what I was doing. I was too aggressive and my account was too small. And then I met Ian. Um, but I won't say that I didn't get hurt in 2007, 8, 9. I got hurt in February and March of 2020, but I got hurt. I got to cash, and I did very well. And anybody that was trading in March 9th of 2009, which was the bottom, I don't know if it was March 21st or whatever it was in 21, March 23 and 20 rather. Those were, if you had any money left, you made a killing. We might be in that right now. I'm not sure I'm convinced yet, and we'll talk about the current market as we go on. Preservation of capital matters. No one ever goes bankrupt taking profits. Why top down? Old slide from Ian's meetings. They used to meet once a month in the Palos Verdes Library. I would go there occasionally from Atlanta to Palos Verdes, California. It was far. And you'd have a bunch of people, smart people in the room. Unfortunately, it was pre-Zoom, or I would have been on every one. And they would all sit there and come up with what they thought was the best stock to buy or stocks to buy that month. And then somebody kept tabulations, and then they would retrospectively review. So today, we could have a discussion about whether we're in a strong market or a weak market or a mixed market. A year from now, we'll know exactly what happened and we'll be able to say exactly what it was. So you don't really know on a given day. You can guess. Are we mixed strong right now? We might be. Or are we mixed weak? I haven't decided. But if we go out to new highs, we are clearly mixed strong going to strong. So today, you don't know exactly what you are. But when you look at really smart stock pickers, to me, there's two very big messages here. In the current market we're seeing, if it continues to go higher, just like March 2020, March of 2009, in a strong market, and assume 20 days is a month, you can double your money. How cool is that? In a bad market, even good stock pickers suck. That's message number one. Message number two is take profits because reversion to the mean occurs. So I typically manage my positions, whether they're stocks or options, and I did this with Summit. After I got my first big move, which was later in the year, I took half off. This past week, I took half off again before it cratered, and then I rebought it at a discount. I like to put money in the bank. That's how you get wealthy, not by losing money or keeping it in a risk world. Take profits. Now, the other thing here is look at what happened in a bad market. It doesn't get better over time. So that was the big difference between a strong market and a weak market. You don't revert to the mean on a very weak market. There was no reason to be going long up until the last week or so. And we'll talk about the signals I use to go long. Market context. Market's 50% of what happens on Monday. You know that. If it comes out on Monday that we have reached a tariff agreement with China, Japan, India, and Brazil, what do you think the market's going to do? Up limit. What is your portfolio going to do? Massively make money. What if we wake up Monday morning, God forbid, Israel has dropped a bomb, and maybe even a nuclear bomb, on the nuclear facilities of Iran? Markets limit down, and you lost a ton of money. It's not how good you are. It's what happens to the market that matters. Now, I should have come out with a video on, I think it was Wednesday morning, when the market opened up down, and because that was an obvious to me sort of the baby out with the bathwater, and that the market would go up the rest of the day, and it was a great buying opportunity, and it was. The market controls things. The next part's the industry group, and then picking stocks is only 20 to 30%. I think people don't follow me sometimes because I spend too much time looking at the market. And my answer is, why wouldn't you? It's half of what happens. The market determines my stance. I want my favorite setups in top industries. I look bottoms up for stocks, for shorts and long, and different tools to tell me what's working in the market. Stage analysis. Stan Weinstein's book is a great book, or he just did a seminar at Tradeline. It's an excellent seminar. I read the book a long time ago. It's funny when you look at the picture of Stan because you could tell it was from like the 80s. Um, he's a lot older now. But I want to buy stocks in stage two, and I want to short stocks in stage four. I've created a model in wealth charts and in Market MRI Pro, and you could create and TradeStation. Oh yeah, and in TradingView. I forgot Praveen did that for me first. And it tells me where the market is or where any stock is in this model. There are actually scanners out there you can scan for stage two and stage four. So I want my two favorite trades are pullbacks in an uptrend where I break out from support. So I look for typically the weekly bongo is long, and I look for the daily bongos gone from short to long, and I'll define bongo in a few minutes. And I want retracements in a downtrend where I want to short the weekly bongos telling me to be short, and the daily bongo after it retraces and breaks down again, it goes from long to short. Now I have learned over the last couple of years to sometime loosen after big sell-offs and accept a weekly bongo to be still short when I make a buy, because when you look at some of the things that sold off hard that are bargains, you're not going to get the weekly bongo fast enough. What is the bongo? Bob Meager knows the bongo because he was around back then. I bet Randy Booth may have been as well. This was something that Ian asked about the only thing I'd say I invented. Me, Gallardi, Minkowski, Powell, a number of us and others, maybe Bob, Manu, Ian's followers, to create a trending indicator to maybe help us find stocks that are moving or changing trend, and that's the bongo. Um, it is a easy to make, slow but effective tool for getting you in and out and avoiding problems. It requires two signals to turn positive. The price has to close above the 9-day SMA, and you have to have the wild or RSIs. The 8-day is above the 14, above the 19. The first day both of those have occurred at the same time, you stay in that direction until you get the opposite. And has it. I built it into TradeStation, TradingView, Market MRI Pro, because it's a great tool. Like I said, it's my only claim to fame that I invented myself. I'm okay with that. So this is the timing model from last night. What Praveen did for me is he took the logic, and the logic is simple. When your price closes above the 30 period WMA, and this is a weekly chart, and the bongo of that time frame is buy, you get a new buy signal. And so he's programmed the logic so you can visually see how effective this timing system has been at keeping me out of the bad market. Yeah, it'll whipsaw you here. Every indicator is going to whipsaw you in chop. Now, most people, oh, is this the daily? Yeah, this is a weekly. Um, no, it's the daily. I'm sorry. I said it was the weekly, but it's the daily. I got the daily twice. All right, I'll show you the weekly later on. But the weekly is really good at keeping you out. So the daily turned first, um, and then the weekly will follow. Since the weekly, when I show it to you in Market MRI Pro, let me just do that because I screwed up. Oh, yeah. Best intentions. Here's the weekly, and you could see this entire run up from the November of 23 bottom until kind of near the top. This bar shook me out. I think it it was that bar. I was in a long-term buy signal. That's what I want out of my timing model. Keep me long. All right. So right now, if I look at, and this is Market MRI Pro, this is what Praveen has programmed that I don't have anywhere else, and it basically tells me I'm in a sell long term on the weekly, even with this recovery. But if I look at the daily, and I'm using a staging environment, which Praveen told me is going to be slow. Well, it wasn't. All right. In the daily, we went, this was a signal to start looking at the market. And I don't know if anybody caught the video where I said, I'm going to buy Palantir when the market turned. And I did. Palantir has been a nice leader. Um, you can see it went to a daily buy. So if I got a daily buy in a weekly short, what am I doing? What would I call that? I've said it a couple of times. I'm going to type in weekly long and short, daily long. I am in a retracement in an uptrend until proven otherwise. Not necessarily the best market to go all in, but I'm becoming more of a believer every time it takes out an area of resistance. More of that to follow. Um, let's go back to this. All right. So I took care of that. If you go back and you look at every major bear market, it will keep you out during most of the downtrend, and it keeps you in most of the long trend. Even the super short 2020, it got you out at the top. It'll never get you in early. This is the weekly. I might look at the daily and at follow-through days to get back in. But my God, it kept me in. This was like I said, after these major market destructions, you get a really good chance to make money. And you could do it in stocks, you could do it in ETFs, and we're not going to spend much time on that slide. Now, I look at my market timing model and then I supplement it with breadth tools. Why? Because breadth tools may give me a heads up that the market is getting ready to make a change in direction. And that's when I make the most money. Now, my buddy Sagar, he likes to buy, sometimes it looks at the bottom, and he's got some great tools for picking that bottom. I'd rather buy high to go higher. It's just different approaches. Um, so I'll look at the Hindenburg-Omen, which I'm going to define for you. Buckets, which I'm going to define for you because it's part of my everyday evaluation. AD lines, which we're going to build in because John wants them in the program, and at some point we'll add divergences into the program. I like new high, new lows. They'll start to turn. Bull markets are not built on new lows. I like to look at stocks in relationship to their moving averages and see it at extremes. And then Ian's mumbo jumbo, and we'll talk about most of these. Hindenburg Omen. Old wives' tale? Maybe. Should I never look at it? I don't think so. This defines the Hindenburg Omen. In layman's term, the Hindenburg Omen are the professionals in the market selling to the amateurs at the top. You're seeing new highs. You're seeing new lows. The moving average of the 10-week NYSL is still rising, but the McClellan oscillator has turned negative. And what you have is a period of entropy in the market. Now, not all Hindenburg omens mean anything, and this thing on the bottom is incredibly important. They don't count until you get a second signal versus 36 in the next 36 days. There has never been a significant market correction from preceding the Great Depression that was not preceded by the Hindenburg Omen. The problem with the Hindenburg Omen is 1 out of every 4 are big and the rest are a big yawn. So it doesn't tell you the market's going to crash, but it better get your neck stiff and make you think about what you should be doing. This is an old Ian slide. He's got the emblem back, and it ran to 2005, even before the big correction of 2000. There were a bunch in 2007 and 8. But if you look through here, you don't see anything that was a negative decline or meaning a positive market. And you see some that were pretty dramatic. There have been others since 2006 through 7. This is 05 actually, and this was an 11% drop. Here's a spurious one. It doesn't count. Here is 07. As I said, there were many of them in 07. And, it started firing early, and then we had a 14% drop. Here's that same 14% drop, and then look at this in 2008. If you had been told what the Hindenburg omen was, and like me, you actually believed it. Do you think that maybe you would have paid attention to this? And we know what happened after this. This is 11 of '07, and we got the black swan of 2008. We saw it again in 2018 here, a modest pullback. Had it here, a bigger pullback. This would have been 2020, and these were all the hit. There was a small pullback here. Actually, this was not the small one. This was the big one. And the point of this was I was trying to prove that the NASDAQ is something we should look at for the Hindenburg as well. And these were on a weekly chart, and you could see some of these weeks had 5 Hindenburgs, some had 1, some had 4 on the dailies. And then proceeded a big sell-off. This was the middle of 21 going to 22 on the NASDAQ. I kept talking about how many Hindis we're seeing, never a good sign, and look what happened. And then in 24, another period of time. This is the NASDAQ. Most of the classic Hindis are on the NYSE. So I actually did a video and a presentation, and if I actually was younger and I cared about getting my name out more, I thought about writing a paper going back as long as I had data on the NASDAQ and proving that it actually worked on the NASDAQ as well. I think it does. So in Market MRI Pro, let's just show you where we are today. What we have here, what Praveen built for me, are my breath tools. On the left is the NYSE. If you want to be super bullish, the world is great, we're going to new highs, here's your reason. We broke out above the 200-day moving average on the NYSE on Friday. That is impressive. If you want to be cautious, look at the NASDAQ and say, well, there was a big trend line here. We broke out of that. There was a 17-day simple moving average. We broke out of that. There's a 50-day. We broke out of that. Will this one be the charm? If we break above this, I'm going to probably start playing with margin. Right now, I'm not margining, which is pretty much the difference between me all in and in. Here's regular volume. I use that for looking for follow-through days because in a follow-through day, you need to have the market go up more than up more than 1% with more volume than the day before. Now I'm going to make little side comments to Praveen here of what I want done. I want my percent change on these charts too. I got a captive audience here, so we're taking notes of all the things. This here is the stocks above the 20 in green, the 50 in white, and the 200 in red. At market bottoms, you're going to see these things get stretched to the downside. At tops, they're going to get stretched to the upside. Look at the breadth thrust on that stocks above the 20. That might be a negative point right now. It might tell us that we've moved too fast, too far, and we might need a pause to refresh. And that's both on the NYSE and the NASDAQ. You got to look at a confluence of symbols and take the best and add them up in your mind and decide what you're going to do. Down here are new high, new lows, advanced declines, and up-down volume, just to give you a sense. As I said, bull markets are not based on new lows and low volume and negative advanced decliners. So if you're looking for a bull market, you're going to want to see a lot of green come in. And then here's the symbol box. And in this symbol box, you have the Bango. I don't have a slide on the Bango, but the Bango is an opposite of the Bingo. And the Bingo I do have a slide on. And the Bingo is the baby out with the bathwater slide. And the Bango must mean we're buying things no matter what they are. We're buying everything in sight. So the Bango is a sign of exuberance. The Bingo is a sign of we're probably getting close to a bottom with irrational exuberance to the negative. The Eureka is a mathematical measurement of exuberance on the indexes. It's only calculated on the NYSE and on the NASDAQ. And Ian was trying to come up with something that would be a follow-through day equivalent. So when I see the market start to move and I see a eureka, I get very excited. Now, I remember when, what was the guy's name? Not Bernstein, Bernanke, I think, called it irrational exuberance. And if you get a eureka after a big run, it probably should be not taken as a good sign. You want the eurekas to occur, these two green lines occurring at a bottom. Um, Now, when you get a phoenix, you want the phoenix to occur at the top. Here is a phoenix. Tell you the market's probably going lower. But when you see a phoenix at the bottom, it's irrational and it's probably a reversal sign. So a phoenix occurs at the top, it means the market's in trouble. A phoenix occurring at the bottom, you get excited. A eureka at the bottom, the market's turning up. A eureka at the top, you have to get nervous. The bangos and the bingos are in here. The bango is the red X. So we had irrational buying on these days. And the bingo, and they're all you gotta do is hover over it, tells you what they are. The bingo, the baby out with the bathwater, well, you see an irrationally bad day, and that was an irrationally bad day. The Hindenburg omen are these triangles down in red. And so now we got to give Praveen some kudos because he's doing all this work for me. And one day he basically said, "Hey, I found the Hindenburg," I'm paraphrasing, "for the opposite of the Hindenburg." And so I put medical names on everything, and we called it the defib. You know, what do you do when you use the defib? The patient's heart stopped. You take and you shock it back to life. And we don't see them often, but we got a defib signal, and that may have been the day. I think it was before I said the bottom is in. But I actually did one of my videos that said the bottom was in. You have to go back a long time to find another defib. But they're there, and they just occur after really big sell-offs. I know they're there because I went back to test them. So it's not a common signal. But when you see one, again, this was a double bottom, but you see them after big sell-offs. So I like what Praveen did there. So that's all in one slide. I can't believe I got all that in one slide. Boy, does that make my life easier. All right, that's market breadth. Now, I think the gold standard, to be honest, and no disrespect to Praveen, is what Sagar did in Q. Now, to be perfectly clear, this requires Metastock as a data service. I like Metastock. I have Metastock. In fact, in about 2 months, if I ever get my manual done, it'll be offered. My Metastock add-on will be out. But I think, you know, if you listen to Sagar's video, he'll talk about how he copied the 13-week new high, new low for me in the buckets. Well, I guess duplication is appreciation because I think he does a great job, and I brought it in here. But I really like this because he shows accumulation distribution, and he has it all in one slide. So Praveen, maybe we should look at the new high, new low. But this is a composite indicator of the NYSE and the NASDAQ, and you could see if you look overall, the market is not extended here. When it gets up here, it's extended. And when it gets down here, it's time to buy. When it gets down here, it's time to buy. When it gets down here, it's time to buy. You like to see the green dots in an uptrend, the red dots in a downtrend. He's got his interpretation of stocks above, and then he's got his AD line, up, down, volume, new high, new low percent. And it's a great tool. I look at it every night. He has the skull and crossbones. How cute is that? Is the Hindenburg omen. When it goes blue, it's a eureka. When it's red, it's a phoenix. This is a combined NYSE and the NASDAQ. He has them for each of the individual um, groups. And what I wanted to point out is we are getting extended on the NASDAQ 100. That's a danger sign. We are not yet on the S&P 1500, but on the large caps, we're getting close. So it would not surprise me soon to see a pause to refresh. See how I'm taking my other signals and I'm trying to fine tune them? Maybe I'm analysis paralysis, but I don't think so. And then you could look at the NASDAQ and the NYSE not combined, and you could see, the NASDAQ, the NYSE is not there yet, and the overall NASDAQ looks very different than the NASDAQ 100. Shocker. We know it's those large 100 stocks that have been driving this rally. Buckets. This is another Ian thing. Ian did the buckets on the S&P 1500. If it works in the S&P 1500, maybe I should do it on everything. How about the NASDAQ, which is more tech, the NYSE, which has a lot of banks and energy and weird shit, excuse my French, and the Russell 2000 is small stocks, because it'll give me a sense of what things are working and, or are they working in harmony. When I see big numbers at the left, that tells me we're getting oversold. When I see big numbers here, I'm getting overbought. Between those two, where it says 1, 2, 3, 4, up to 10, that's taking the Bollinger Bands and putting 10 deciles. In a strong market, most of the stocks are in the upper half. Guess what? We've turned strong. Most of the stocks are in the upper half. In a weak market, most of the stocks are in the lower half. We were weak, we're not. When we go from weak to strong, I call that we're moving to the right, a right shift. When we're going from strong to weak, I call it a left shift. And then I look at the above and below. Here is a cup. This is an Ian slide. And he talks about kahunas. We're not going to talk about, we'll talk about that later. But basically, a percent B tells you where you are from top to bottom. And if we set 0 at the bottom and 100 at the top, all we've done is taken 10 slices and counted up how many stocks in the index are in a slice and then plotted it. But we look for above and below as the signals. This is what it looked like in a very difficult time in the market. This was October 2008, which many of us hoped would be a bottom. The market did rally, but it went to become, I said, a lower low. And I bring this up every time I'm starting to talk like we look like we're going to bounce, we look like we're going to bounce, just to temper my enthusiasm, because when we do that, they can still get worse. And this tells me what percentage of stocks are in each decile: 45 below, 55 below, 70% of the stocks below the Bollinger Bands, and 99% of the stocks below the midline. These are ugly. These are days that you're wishing you were out of the market or short, but you also get the feeling it's too late to change because it's going to rocket higher, and it doesn't always. Bingo. I already told you what it was, so I'm not going to spend any time here, but I'm giving you the formula. Baby out with the bathwater. That's all it is. It means the market had a hard sell-off. It was indiscriminate. They were selling everything. Eureka. That's that exuberance to the upside. But if it occurs after a large run, start thinking it's irrational. Phoenix is that signal to the downside. It's exuberance to the downside. But if it shoots at a low, figure it's going to bounce. The bongo we talked about. Again, these are all Ian slides, if you couldn't tell, the white slides. And then that's how I look at the markets. And we're going to look at it at Market MRI Pro. Look, I'm not here to sell you Market MRI Pro. I am. I'd love to sell you Market MRI Pro. Not for me, believe it or not, for Praveen, for all the work he put into it. And just to give you an aside about the Orange County meeting, and just so you get the dedication of the people that are speaking and the team that puts it on, nobody gets paid for speaking. I do get my hotel paid for. That's it. I fly myself. I bring my own projector. Dev doesn't get paid. Dan's not getting paid. We do it because we like to educate, we like to give back, we like to help people. There are programs out there that I've been to that are $5,000 to $10,000, and they can be really good programs. We'll put on a good program for cheap because we want to. I do have a more expensive meeting that I do every once in a while in Florida, but if you've been to that meeting, you pay $1,500 and I feed you 3 meals a day. I take you on my boat and it's a great time. That's not this meeting that's coming up. So now I've decided about the market. And again, we're 50 minutes in. This bozo hasn't even talked about stocks yet. I know 50% of the time of the movement's the market. Leading sectors. You can look at wealth charts where you can rank by sector, break out by industry groups, pick your favorite industry groups, and then see what stocks are there. It does a great job of that. Maybe too great of a job if you see how many stocks it has. And we have the same problem. We have a very big, but we have the ability to tone it down, as I'll show you in Market MRI Pro. HGSI, and I love this program. I always will. I still use this program. Now, the challenge with HGSI is this isn't what it looks like when it starts. When it starts, it's just this thing here. But if you invest the time into HGSI, it's a great product. And what I like about it is I can rank indexes here and see what the leading indexes are, the mid caps, the Dow, small caps, small caps. That's great because I've got one portfolio that I went heavy on small caps now. All right. The charting platform, it might be old, but I'm not sure there's anything better. All right. And I'm saying that with Praveen in the room. Okay. And that's not a diss on what we built. Um, Very customizable. And so I would do my top down in HGSI. I would run through all the indexes. And again, you've got Kahunas built in, Eurekas and Phoenixes, all the things that I built. Most of it, not the defibrillator, are inside HGSI. Um, it's a little bit more of a learning curve. But HGSI, and this is where I always loved it, is I can look at all the industries and I like to rank them. And then what I do for my top-down analysis is make sure I've got the big ones at the top. And that's the leading index in HGSI right now, which is cruise lines. If I right-click, change the industry group, here are the stocks. And when we do our workup for options, I thought about using Carnival, but I want to go with what I think is the leader in the industry, and that has been oh, I skipped it. This guy, Royal Caribbean. So we're going to look at Royal Caribbean, and again, this is remains a great program, and I think one of the things that Ian did so well was he taught people how to use it, um, and it's still on my desktop. And the big difference in my life now is I actually pay for it because when I used to do my videos in HGSI, George was gracious enough to supply it for me. But since I kind of compete with it, even though I don't really compete, personally, I don't feel it's competitive. I don't feel right taking it for free, so I pay for it. But again, it's another tool that allows you to rank your indexes or ETFs, rank the industry groups, and dive down to the stocks. Um, I'm like in mourning right now. I'm in mourning because I can't get my Q Edge tool to work. And what's happening is Metastock is changing its data feed and it's moved to a new feed. Um, I'm sure I'll figure it out um, how to get it to work, or I'll have Sagar get it to work. But Sagar's actually come out with a new version for the new data feed on Metastock. If you haven't changed to workspaces yet, then this probably still works. I like to be an early adopter. Then I realized that was a oops because it doesn't work for the queue. But again, this is a tool that's in a spreadsheet, requires Metastock data, but again, ranks sectors, industry groups, and allows you to drill down to stocks. And I'm going to spend a lot of time, but you know, if you haven't figured out what the genesis of Market MRI Pro was? The genesis was I'm paying for 10 different programs. I'm still paying, well, I'm paying for a lot more than 10, but I'm still paying for them. But the most important thing I have is time. So I wanted a tool that I don't have to use 10 different programs. And that's why I built Market MRI Pro. That means if you have HDSI, TC2000, TradeStation, TradingView, and Sagar's tools, you already got everything that I'm going to show you, or you can purchase for them. I want to make my life easy. So we're going to go later into Market MRI Pro. Ratio charts, all we do here is we take a ratio of the, except for Bitcoin, the S&P sector versus the spider, and that tells me relatively to the market what is outperforming. You can do it in wealth charts, which probably has my favorite way of making ratio charts, meaning the easiest. You can also do it in Market MRI Pro. You can probably do it in most programs if you figure out how. And so one of the things that's on my ask list for Praveen, and I know he can do it because these are ratio charts in Market MRI Pro, these are wealth charts, is to make user custom ratios so you don't get stuck with just the ones I put in. To give us 3 time frames, right now I'm looking at the hourly because that's one that's going to move at the right time for me to look at what's working on a daily chart. But I want daily and weekly as well. So what do I look for in the ratio charts? What's got the white bars and what's up at the top? Bitcoin's obviously been very strong. Technology has started to, or this is a couple, this is old. All right, so let's look at it in the right now. You want to, this is strength, straight up white bar. Okay, this is strength coming up off the bottom, technology. This is not strength. Staples are rotating out. That's a defensive play. Utilities are rotating out. Real estate was rotating out. Healthcare has been rotating out. When were they doing well? When the market was tanking. So it gives me a great sense of the ebb and flow of what's working and what's not working in the market. And then Wealth Scanner inside of Wealth Charts is another tool that he uses an algorithmic. I mean, I use it almost every day, so I'm going to call it out. Again, I would like to sell a lot of Market MRI Pro to reward Praveen. That's not why I built it, or I hadn't built it. I built it to make my life easier. But there's certain things that I'm still going to respect and use in other programs. Wealth Scanner is some type of an algorithmic scanner. So I put my big list of ETFs in there and I look to see what's coming up. This is the bullish scan. If you're thinking that the market is really strong right now, the time frames I'm looking at, oops, that's not going to show, is daily and smaller. Okay, what is the top? Only thing above 800 is Hero, which is video games and esports. 850 is the top score. There is nothing above 800. So as strong as this market has been, it is not as strong as it looks on the broader scale. When I look at what is down here, Canada, Australia, that's not growth. I want to see software, semiconductors, things that I like to buy. This is all lagging stuff. I mean, this tells me that the market underneath is not as strong as those indices. If I want to look to the bearish side, what's doing poorly, and you don't get as big a number on the bearish side. 470, I think, is met oil, emerging markets. Now this is bullish. How could SQQQ be bullish? If SQQQ, which is short the Qs, is the worst performer, then that means the Qs are going up. That's the only thing I've seen so far that tells me the markets are in any good shape. So they feel good. Your portfolio looks a lot better. We are retracing. in a downtrend. We are retracing in a downtrend. That doesn't mean, uh-oh, somebody's drawing. Don't do that to me, please. Please don't draw. I'm going to stop sharing for a second to kill the draw. When you draw on your screen, you're drawing on everybody's screen. So please don't draw. Um, if you have a question or concern, or you can't hear me, or you disagree with what I say, type it in the chat. I think everybody can see the chat. I have it right in front of me, so I see it too. And then again, another thing that Q did, and it's not working for me right now, is they took my buckets and they made them real time. Oh man, I love this. I love this. So you know what that means. My buckets are real time too. Now, this won't update automatically because it doesn't change every minute. But you want to update it, it takes 2 seconds, 3 seconds to update it during the day. Um, but guess what else I can do? I can look at 3 different markets and I could tell you as often as I want to update it, how many sectors are up today versus yesterday, industries up today versus yesterday, how many stocks are up in the market today, how many are above the midline. And it's the S&P 1500 and the NASDAQ and the NYSE, and we'll come back to this chart later. So Sager and I do things very similar. And here it is, my heads up display. Now I turned people on to a spreadsheet a couple years ago that I used. I can't remember who did it. And then it just got to be finicky. And so I got rid of the spreadsheet and had Praveen do this. So Praveen added Bitcoin and the dollar, but Praveen, I think you took out VXX. I couldn't find it today when I was looking for it. I love having Praveen here because I can look at him and tell him what to change. I can ask. Don't worry, I'll treat him to lunch and dinner today. And then it becomes time now to find the best opportunities. So I've looked at the market. We're retracing in a downtrend. That is still a bearish market. I am in this market. I went in when my daily bongos changed. I went in more when we had the O'Neillian follow-through day, major index up 1%, higher volume than the prior day. And then I started looking for opportunities. I find the best opportunities by looking at my scanners. My scanners, as I said in the beginning, a scanner is running a lot of stocks through indicators. Indicators are price and volume and time derivatives. Too many indicators probably duplicates the same question over and over again, and I'm probably guilty of that. I think at some point there's confluence when you see 3 indicators or 4 indicators firing at the same time. That makes me feel better. But if you're requiring too many, you're looking for, I think you get duplication. So the scanners are looking for them. So we're going to talk about my basic indicator package and the indicators I have. And we're going to do that for the next 10-15 minutes just to review everything. This panel here will be in every platform that you might use of mine. On the top, and I like to put it on the top, is the high-low jump. So Ian taught us about the high jump. The high jump is when the market's extended. You'll listen to CNBC and they'll bring the talking head on who will say, this stock is extended. Okay. So you're telling me you're looking at it and that's what, yes, okay. I can't scan for your eyes, but we can make it math. And I'll show you the math in a few minutes. Next is 2 time frames of bongos. I don't care that much about the monthly. I do, but I care more about the weekly and the daily. Monthly slows me down. It's too slow. And then I have my dots, and the top dot is my EMS system, and that is a type of a crossover system that um, moves very quickly. But all right, it's an early signal. The next one is my CPR. Remember the heart names? Sorry. Um, Again, a different type of a crossover system. Then I get into my 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 core gaps, volume, breakouts and breakdowns, Kahuna force, which I'll tell you about, and then the garden variety squeeze, except we have, and I think he put blue bar dots. Praveen, make them green if you would, instead of, or make, I guess blue's fine, never mind. The squeeze is when it's yellow. The squeeze is when the Bollinger Bands contract within the Keltner channels. Then the three dots are just the 3 days after it came out of the squeeze. I don't buy it when it's squeezing. I look at it when it's squeezing. I buy it when it breaks out. And the thing about the squeeze, it can break down or break out. This is a Wilder PSAR. Why do I care? I don't care that much, but there's a bunch of people that trade on the Wilder PSAR. If it says to be bearish, well, that may mean something. If it says to be bullish, then here are two of my favorite things that we created. Chris, oh God, it's been so long. Wilson, I think he lives in Alabama. One day was sitting at me in a HGSI meeting. He said, Jeff, I take the relative strength of an individual stock versus the spider, and I plot a moving average, and the uptrend starts typically when that ratio crosses above the moving average. Now, it's more powerful to look at the weekly cross, but I go, wow, that's pretty cool. So I put that in here. And then below that is on balance volume. And again, I'm looking for the cross above the moving average. Why does this work for me? Well, let's go back to my medical analogy. When I'm a little guy, intern, resident, doing my internal medicine, I had to do cardiology, and we stick these electronic leads on your chest, your arms, your legs, put out a sheet of paper with little squiggly lines, and that sheet of paper called an EKG would tell me what's going on inside your heart. Do I have to be worried? Are you having a heart attack? Are you having ischemia, lack of oxygen? Do you have something that happened in the past? Is your pace the wrong pace? Is it too fast? Is it too slow? Why can't I do that with stocks? So that's what I tried to create with my indicators, the ability just to look real quick and then go look deeper when I start to see my indicators. So I look for pullbacks to support in an uptrend. So the bongo, we talked about that before. Squeeze is another thing that's telling me I pull back to support. I look for change in direction. I'll talk about failed new highs and new lows. PSAR changes. I look at my impulses, gap, volume, breakout, momentum. I look at extension, the high, low, and my two other trading systems, which I add on. So big gaps can be big winners. It looks at size, volume, and where it closed. Big volume equals conviction. It looks at today's, it's a derivative of pocket, of what is it called? The pocket pivots. I took the volume from pocket pivots and made a few changes to it. I'm looking at a big volume to the upside versus the last X days and looking at how I compare to the highest volume to the downside. Why that's important is because a stock like Bank of America probably trades 50 million shares a day, and a regional bank trades 2 million. If the regional bank goes to 2 to 5 and Bank of America goes from 50 to 40, which one is more impressive? It's the small bank. So I wanted to come up, and I thought what Gil Morales and Chris Catcher did was brilliant because it gives you a sense of that individual stock, what's unusual. The breakouts, this is a derivative of David Elliott, may he rest in peace, which unfortunately is a theme of my teachers, Ian Woodward, George Lee, um, uh, David Elliott, Stephen Bigelow, what's Mark's last name, the guy that teaches the mental stuff. Unfortunately, a lot of William O'Neill, a lot of the great teachers have died. That's because we're getting old. And then momentum, I take force, which is something Alexander Elder created, which is you basically take price times volume or change in price times volume and plot it, and he looks at EMAs of force. And then I combine that with a kahuna, which is a big move, and then we make sure they're both in the same direction, and that's kahuna force. So it has volume, price movement, Bollinger Bands, so it's its own little thing. Squeeze, don't need to teach a squeeze. We all know squeezes. John Carter did not invent them. He sure as heck is the one that made people know that they exist. High-low oscillator, here's the math. It's easy math. It's hard to program. It's great to look at to see if a stock's extended. Do you want to buy an extended stock? Not everybody wants to buy an extended stock. Do you want to potentially look at a stock that's bouncing, that's oversold to the downside extended? You might. And then if you look at the green is the combination of the distance from the 17, the 50, and the 200. That's the one that we pay attention to. Every peak, you have peaks. And so I'm looking for percentage-wise how high you are compared to the highest you were in the last year. And you can see over and over on these big run-ups. I should put Summit in there. In fact, let's look at Summit. I don't even. So remember when I told people that I was buying Summit at the meeting, I forgot. It was 10 bucks. And the reason why I told them last June that I was buying it wasn't because of the stock chart. So this is what it did at the end of May, and our meeting was around here. I did it because of the fundamentals, because I knew what they were doing from a clinical trial. It ran up, got high on the high jump, 97, pulled back. It ran up here. This is back in September of 24 after its big data release. And the high jump was 99. And it ran up here. And the high jump was, oh, it wasn't. I thought it was higher. I might not be top ticking it. It got up close. Every other time it went up, it came back down. So that's why I sold it. Now, if you still bought it at 10 bucks, you can't be mad at me. You're not mad at me anyways because you already had the big move. I also put out on Top Down Trader that I was buying it back, and I bought it back on the next day after it did this. I thought the market blew it. I still think the market blew it. I gave my rationale, and maybe I shouldn't get so fundamental, but we'll see. Green candle low, red candle high. By the way, it's a lottery ticket. There's a trial that will be read out later this year. It's the same basic trial that's been positive 3 times in China. If it's positive worldwide, it becomes the new standard of care for lung cancer. That is probably a $300 billion market. It'll be number 1. So, and if it's negative, the stock goes to 0. Green candle low, red candle high. David Elliott created these, and these are just looking, and I just put them in the chart here, and it calls reversals. You're in an uptrend. You're getting extended. You gap up, and you close lower than the open. You've got a red candle, but you also set a new high. So a red candle high is a stock that gapped up, reversed, and came down. That is a reversal candle. You're in a downtrend. You gap down, but you closed up. It's a green candle with a new low. That's a green candle low. They can be a precursor to a trend reversal, and I like to combine them with the high jump. The EMS, this will just tell you about it. I'm going to put the PowerPoint on Top Down Trader and the copy of the video. Again, it's another crossover system with some extra twists. The CPR is a totally different system. They'll have very similar signals. You don't want 2 signals that are both bullish and one tell you to buy and sell. If the 2 signals that do opposite things give you opposite signals, one of them doesn't work. And then best supporting actors, I showed you the relative strength of the underlying SPY, the OBV, and I love divergences, and I have to look at them right now. we're going to probably build them into the program. So we are now at an hour and 14 minutes. I think I'm going to go through the next section very quickly, and then we'll take a 5-minute break if that's okay with everybody. All right. My favorite setups, and then we're going to go spend time in the programs. Pullbacks in an uptrend, stocks in an uptrend. The weekly bongo is green. This is a pullback. It is possible in here the weekly bongo turns red, or the daily bongo rather turns red. And then it turns around and it goes from red to green. So I want to buy it right here. I want to buy it right here. I don't want to buy it here. I don't want to buy it here because if I buy it here, my stop is right below here. If I think it's Palantir and it's going to the moon, where am I going to put my stop? It might be too far to put it down here. So I'd rather buy near support when it starts moving up. The ingredients, bongo weekly green, daily went red to green, price near moving average or support. I get my momentum signals, and I'm reinforced by the market doing well, a squeeze, and the relative strength of the OBV. These are not necessary. The more I have, the better the stock's going to do. I'll talk about free parking. It's the 50-day moving average. This is an ancient chart in HDSI of Micron, just showing you don't have to chase, because even Palantir will someday come down to its 50-day moving average. They all do. Whether it's driven by a company news, if Trump says we're cutting back on funds for defense, Palantir's going down. They have a data breach, think about, or a software update that causes a problem, think CrowdStrike, they're going to come down. So free parking is just a return of price to the 50. Ian would say that all leaders will revisit the 50, and it can be a great place to buy during an uptrend. And the great leaders will ride up the 17 simple and do the same thing. Finding my A trade, I'm not counter trend. If the market's up, I'm looking long. I start with the top sectors and industry groups, and then I'm looking for my pullbacks and uptrend, move off support, supporting evidence, and make it quick and easy with the scanner. This is a stock I bought, and I only like to show what could be considered bragging, and it's not bragging because the SEC really gets pissed if I tell you I did something and I didn't do it. And I'm not a professional. I don't think anybody at the SEC is going to look at my videos. But I got spanked by one of the people I spoke with because he felt that I was claiming that my things worked, and he doesn't want anybody to claim their stuff works, which is bizarre. This was RSG, Republic Services, and people call this a wedge pop, where you could draw down here. There was a wedge, but here was a stock that I was following. It gave a buy signal over here. Here's the dots lining up out of a squeeze, and I continued to watch. The yellow is the 50, and I'm sitting on the 50, and my relative strength crossed over the moving average. The OBV is good, and so on my weekend review, I said pull back an uptrend, exited the squeeze, crossed above the 50, has a breakout dot, which is something in wealth charts, a new wealth signal, an existing EMS. I enter the trade of above 186, and I use buy stops to enter my trade, meaning I usually set a buy above the high of the day because the market trades down and I'm at work. I don't want to fill that trade. I want the stock to trade into me, not come down to me. I elected calls here with a 1-month duration. I could have gone longer. I set my stop at the 17-day, which is the green. I was still in the trade in July 18th, which was a month later. I was in this trade for a long time, and I kept rolling it forward, meaning I would sell my current spread and buy one another month down with a higher strike price. And by doing and then selling something out of the money against it, like a covered call, and I kept taking my profits out. This thing went up to 30, 240, and even though it didn't make a major move, because of all that premium I sold, I made a lot of money on that trade, and I actually have the accounting for that. Maybe I'll put it together for Orange County. CLBT is the same story, and I presented these at a well charts. I'm still in a little bit of this trade, and it's 20 now. But here's a stock that gapped up, went sideways, pulled back to free parking, and had massive volume. You can see my dots lined up. My relative strength crossover, the OBV, I went long, and same trade, except I eventually bought some shares with some of the winnings. I have a modest position, and like I said, I think it closed at 20. GEV, this is the good and the bad of trading growth stocks. Big uptrend, sideways move, and both Praveen and I bought it. And we bought it off of the 50 on this bar, pulled back a little bit, but went up a lot. Now, the problem with GEV and the problem with a lot of growth, and these are not buy and forget picks. Oh, I forgot. So there's a change in the program now. I don't have to go up here to type. The first letter you hit opens it up, and then you type in your symbol. Praveen, turn off my echo if you would, please. Oh, he's not there. Are you hearing the echo in the background? Y or N? Okay, then I don't have to worry about it. But you could see GEV top ticked up here. So it gave us a signal of 323. So you couldn't have gotten into it until probably 360, and it went up to 447 in a matter of a couple days. So this stuff works. It works better in a good market. And I'm not going to go through these. I have a lot of examples with the lines are where I took the trades or I recommended the trade. This is one I took multiple times on the way up, SMCI. Remember this went up and had a big split. Bottom fishing, I'm looking for a stock that's been in a downtrend and it breaks the downtrend line, retests, and breaks out. Um, as you can see, stock is well off the old highs, likely below the 200. Bongos are mixed. I need a new uptrend, which is higher highs, higher lows. I got to close this door here because the echo's killing me. And when I built this house, my wife hates listening to me. So we put sliding doors, glass doors, in my office, which is also the den. And the whole reason is so that she doesn't have to listen to me do my videos. And what she really hates and what really sets her off is Discord blip, blip, blips all night long. She'll wake me up because I forgot to turn them off. I live in the mountains and I didn't want to lose my view, so that's why they're glass doors. All right, I don't hear it anymore. All right, now I know the downside of having somebody hear while I'm doing a video. All right, so bottom fishing, need a new uptrend. There's different patterns I look for. I want to see my impulse indicators firing. I want to buy optimally on the retest of the trend out, and I like my supporting evidence. This is the best trade I ever took in my life, and I gave it out at Orange County meeting in 2018. I gave it out. The stock was 450 on Friday. I flew home on Monday. I didn't get into it until it was $6 or so. I kid you not, the stock went up to $150. Something like 150. Let's look at that. And that was that. And I actually did it on an HGS on my weekend video, Tandem Diabetes, and it's round tripped. Let's go to 2018. Back, let's just do this here. I believe it was March, this weekend, March 7th of 2018. This is really cool. We can go back to whatever year we want. We got data going back really far. And that's, oh, come on. What did I do wrong? March 18th. There we go. So my day is going to be right in the middle. I'm sitting in the, yep. Actually, it was April 8th, not March 20. All right. Doesn't matter. I'm sitting in the meeting and I go, wow, this might be where I'm sitting. Is that? That's March 9th. Look at this stock. This is incredible. It's it's got a long base, a Weinstein stage 1. It's now clearly in an uptrend. All right. Clearly, and here's a little bit of a retest and a breakout and came back. And it's got all blue here. Relative strength and OBV look good. It's certainly not extended. And I gave it at the live meeting. That was a better call than Summit. I gave it on my weekend video, and you had to live through. And I took profits all along, by the way. I did, and I had a big position. I don't think it split because it was. Is this the up? There you go, $150. I mean, $5 to 150. When's the last time somebody gave you a tip? And there were a bunch of people in the room and a bunch of people on that video, and I bet nobody bought it. Oh well, and it round tripped because it came all the way. It had a couple big moves, but it came back all the way down. And if you hit this, it'll bring you back to today. How cool is that you can pipe in any day you want, it'll take you and put it in the middle of the chart, and you can look at how things behaved. Is it setting up again? It might be. Look at what we got here. Broken down stock, absolutely. Sideways move, probably not long enough for me. It just broke out here. I've got an EMS that fired back here. Like I said, this is my early signal. It's the same signal that I have in wealth charts. Here is my CPR. It's not in wealth charts. It's the breakout there. 4 dots coming out of a squeeze. Relative strength just broke over and OBV just broke over. It's the same thing all over again. Now, I'm not promising anything, but that's a pullback or a trade on a bottom fishing trade that I like. This was probably earnings. Oh, by the way, if you don't know the program, oh, come on. Where's the earnings? So let's try. Hold on. Let me see if it's. Oh, all right. So now let's go back to Tandem and see where. I may not have waited enough time for it to build up. So you can see it's been negative for a long time. I don't know why it's turning around. Its earnings are starting to grow, and this is the earnings here compared to the earnings here when it shows you the change. They don't all do what Tandem and the others have done. I was looking at ARC. This is a while back because it was doing the same thing. It broke out above the 200 and retested. It did go higher. It didn't go to $150. And then the other trade I like to the long side is the Darvis box. And the Darvis box is you buy it at resistance. Excuse me, you sell it at resistance, you buy it at support. And you're probably thinking, nothing ever looks like that. Here's the definition. Here is the weekly on the Russell 2000 from March of 2020 until 2022. You had a Darvis box for basically 2 years on the Russell. And if all you did was sell it at the top and buy it at the bottom, you were printing money. Now, there was a signal on this chart which was the strongest signal on the chart, and that is this signal right here. I just want to talk about it. The Darvis box is Nicholas Darvis wrote some great books about he made millions of dollars in the stock market. And apparently, according to Ian, he was a dancer. And the Darvis box is, the stock's going sideways between support and resistance, support and resistance. When you break out of resistance, I would expect a move, perhaps as big as this delta was here. And when you're expecting a move, and the move doesn't happen, that is a sign that you might have an opposite reaction. And we did. I think trade line is a trade line. Richard Mogul, I think he calls that an expectation breaker. When the market doesn't go to the expectations of what you expect it to do, and it goes the opposite, that's probably a big signal by itself. That was an expectation breaker, and boy, did that market sell off from 246 to 172 on this failed breakout. You can find the exact same trades for shorting, and I'll do those in Orange County. I'm not going to do them here. We're already at 1.5 hours. And then gold breaking down, it's the same things we've looked at with the relative strength in OBV, the red dots, etc. United Healthcare, boy, this thing is in trouble now too. And then use the scanners to make it easy. We'll spend a lot of time in the next 30 minutes after we take a break on Market MRI Pro. I built the scanner in to scan for all these signals into wealth charts. This is my CAT scanner and wealth chart, so I can find a constellation of signals. My TradeStation app, we'll use that some after the break. I've already ran this. You run this once, you do your scans off of it. I'll show you some of the cool things I can do with that because some of you probably own that. And then here's the, we also, I'm not sure we'll do it today, but if you've bought my Market MRI tool, you get the trading view indicators for free, and there's a way to go between the programs in Market MRI. So it is 1:31. 5 minutes is it. At 1:36, 1:37, I'm going to start again. Why don't we take a short break? I'll see you back in 5. Somebody type a Y in. Can you hear me now? Tom, I know you said put a question mark. Okay, good. Yeah, I was talking with Praveen. Didn't want to share trade secrets. Joke, joke, joke. But I had it on mute. So if these, it's one of my philosophies of trading, or not my philosophies, that's the wrong word. My experience of trading. People will ask me, what are my win-loss ratio? And I'll laugh at them. Who cares? It's do you make money that matters. And money management is so important. You don't want to be buying a lot of shares in something you lose on and having a big winner and you didn't buy enough shares. And well, in Orange County, we'll talk about some of the things that you can do to make sure that doesn't happen to you. But when I look at my portfolio over time, there are probably once or twice a year that I hit a home run. If I'm lucky, maybe it's once a year. And I'll probably perform like the market or a little bit above. But if you think about it, most professional money managers don't perform above the market, so I don't feel that bad about it. But then you hit a grand slam home run. And my wealth has been built by the grand slam home runs. And I've had a number of them, and I only talk about the ones that I actually told people to buy when I was on live, because if the SEC or somebody came in and said I was making false claims, I could show them the video. Well, I was doing a HGSI video on this candle right here. Is this the candle? This candle, on this candle here. And I said that I thought Generac was looking interesting here. And Generac did like a tandem, but it was a $100 stock. It gapped up the next day, so you paid 110. And this was another one that had a great move. And the point I want to make is they occur all the time. You don't have to find all of them. If you're not in Palantir, who cares? If you didn't do SMCI or MicroStrategy, who cares? Be in the next one. And look at this thing. It went up a ton from that $100. But the message I want to give you is this is what happened to it. It went up, it tagged 500, and still going down. There's absolutely no reason why you want to be in a stock and write it down. So Generac was another one, and it is back down to where we bought it. So round trips are great for air travel. They suck when it's your stock.